Bitcoin is going up. It's gone up about 200% in the past year, and just this year it's gone up about 20%. Just to put that into perspective, the S&P 500 averages around a 10% return per year. As you can see, this is ridiculous. So why is Bitcoin going up this quick? This is the main reason. If you've been living under a rock, we've been expecting this for about a year. And as of January, it got approved. So there are now Bitcoin ETFs being traded in the American market. Why does this affect the price? This is why. The institutions are now buying Bitcoin to back their funds, and they're buying around 500 million USD a day. Now, this may not sound like a lot in a market this big, but just to put it into perspective, Michael Saylor, one of the biggest advocates of Bitcoin, has been pushing it for years. He has spent 4 years and taken out a lot of debt to accumulate 190,000 Bitcoin. BlackRock, who started trading in January, has taken 3 weeks to accumulate 191,000 Bitcoin. This is how fast the institutions are buying up Bitcoin and removing them from the exchanges. Will Bitcoin keep moving up? Yes. As you can see, we've had this massive gain, 100, 200%, while we've been waiting for the ETF, and another 20% just this year. We have done all of this without retail interest. If we zoom out a little bit, you may remember a couple of years back, Bitcoin hit around 60, 70,000 USD. If we go on Google Trends and look at this aligns with this state when there was a retail interest on how to buy Bitcoin. Now we've almost returned to these levels, as you can see here. We're shy of the all-time high, and we'll probably hit it pretty soon. Where is retail interest? At an all-time low. What does this mean? Once retail interest comes in and they see how much the institutions have been buying and how much we've gone up over the past year, they're going to want a piece of this cake. Once retail starts buying and this interest goes up, the price will follow. We'll break these all-time highs and go into price discovery. Here's another visualization of that graph. So as you can see, last time we were at 52,000 Bitcoin, which is the level we're at now. Google Trends was at a 100% for relevancy. We are now at the exact same price a few years down the line, and the relevancy is 27. We have a long way to go. If you look at this graph and you think 200% in a year, there's no way we're going to go more. Here's a visualization of what happened last time. As you can see, the move is parabolic once retail interest comes in, but over time, it becomes insignificant. Although we have gone up 100, 200% already, that will be insignificant compared to what's coming when retail enters the market. Now, where are we in relation to the previous bull run? Here's a great visualization from Rex Capital. As you can see, we are in the same location pre-halving as we were in around May 2020. And what came after this? A little bit of a reaccumulation phase. What came after that? The parabolic upside that we saw in this video. Where are we now? The exact same position. As of today, we are roughly 60 days away from the halving, and then we will go into this reaccumulation phase, and what comes after that is the same thing we've seen in the past 3-4 cycles. Do not let the institutions buy out all the Bitcoin and remove it from the exchanges. That is exactly what they're trying to do now when retail interest is low, and that is going to push the price up to a point where the average retail investor is priced out of the market. That is exactly what they want. Don't let that be you.